Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to uncover what is really going on behind the numbers. Today we are diving into a report from Lion Group Holding Limited. This isn't a full yearly report, but a snapshot of their performance for the first half of 2025, specifically up to the 30th of June. Think of it as a mid-year checkup for the company. It tells us how they have been doing financially. Now, before we get into the meat of the financial results, let's quickly touch on what this form tells us. Lion Group Holding Limited is a foreign private issuer, meaning it is a company based outside the US but still has to report to the US Securities and Exchange Commission, or the SEC. They have chosen to file their annual reports using Form 20F, which is pretty standard for international companies. The main event here is the unaudited interim financial report. Unaudited means these numbers are their best estimate, but they haven't been formally checked by an independent auditor yet. Interim means it is a report for a period shorter than a full year. So, we are looking at their performance from the beginning of 2025 to the middle of the year. This is important because it gives us a timely look at where the company stands before their year and results come out. Lion Group Holding Limited is registered in the Cayman Islands, but their principal executive office is in Singapore. This is common for companies seeking certain financial or tax advantages. So, what can we glean from this mid-year financial report? Since this is an interim report, it is crucial to see the trends. Are they growing or shrinking? Are their revenues increasing or decreasing compared to the same period last year? Are their expenses under control? These are the big questions we want answered. Let's talk about revenue. In simple terms, this is the money the company made from selling its products or services. If revenue is going up, it generally means the company is selling more, which is a good sign. If it is going down, it could mean they are facing challenges in the market. Then we look at the cost of revenue. This is what it cost the company to produce the goods or services they sold. The difference between revenue and cost of revenue gives us our gross profit. A healthy gross profit margin means the company is efficient in producing its offerings. Moving on, we have operating income. This is what is left after deducting not just the cost of revenue, but also other operating expenses like salaries, rent, and marketing costs. This is a key indicator of how well the company's core business operations are performing. Finally, the bottom line is net income. This is the profit after all expenses, including taxes and interest, have been paid. This is the true profit that belongs to the shareholders. Analyzing these numbers for the 6 months ended the 30th of June 2025 will tell us if Lion Group Holding Limited is on a good trajectory for the year. A significant increase in revenue coupled with controlled costs would suggest a strong performance. Conversely, declining revenues or rising costs would signal potential issues that investors and stakeholders should be aware of. It is also important to remember that this is an unaudited report. This means that while it gives us a good indication, the final audited numbers might show some differences. However, for interim reports, these figures are generally quite reliable as a snapshot of the company's health. Looking at the business strategy, a company like Lion Group Holding Limited often operates in dynamic markets. Their financial performance will be directly linked to how well they are executing their strategy. Whether it is expanding into new markets, launching new products, or managing their costs effectively, we should also pay attention to how they are accounting for their revenue and expenses. The section on significant accounting policies and estimates helps us understand the rules they are following. For example, how do they recognize revenue from long-term contracts? Or how do they value their inventory? These details can have a big impact on the reported numbers. Another critical area to examine is their indebtedness. How much debt does the company have? High debt levels can be risky, especially if the company's earnings are not growing fast enough to service that debt. This section will highlight the aggregate amount of their indebtedness as of the 30th of June 2025. Giving us a clear picture of their financial leverage. The report is signed by Chunning Wang, who holds the titles of Chief Executive Officer and Director. This indicates continued leadership at the helm of the company, which can be a sign of stability. Overall, for Lion Group Holding Limited's interim report for the 6 months ended the 30th of June 2025. The stories in the trends. Are the revenues growing? Are profits increasing? Is the company managing its debts and expenses wisely? These are the questions this report helps us answer, giving us a glimpse into the company's performance and potential direction before their full audited annual results are released. Now, looking at these results more broadly, Lion Group Holding Limited's mid-year performance will give us a crucial indication of their overall health. If we see strong revenue growth and increasing profits, it suggests they are successfully navigating the market and executing their business plans effectively. However, if the numbers show stagnation or decline, it might point to underlying challenges that need to be addressed. One notable risk could be increasing competition in their sector or global economic uncertainties that could impact their sales and profitability. On the other hand, opportunities might lie in successful expansion into new markets or innovative product development that resonates with customers. My take on this filing is that while we do not have the full picture yet, as it is an unaudited interim report, it serves as a vital health check. It allows us to see if the company is on the right track or if there are red flags that warrant closer attention. We need to see if their revenue growth outpaces their cost increases and if their net income is consistently rising. Without the specific numbers from the financial tables, it is hard to give a precise assessment, but the framework of analysing revenue, costs, and profits is key. We also need to consider their debt load. Is it manageable, or is it a heavy burden? Alright, that is our quick look at Lion Group Holding Limited S Interim Report. What are your thoughts on mid-year financial checkups like these? Do these reports give you enough information to make informed decisions, or do you wait for the audited annual reports? Drop your thoughts in the comments below. If this analysis was helpful, please hit that like button and consider subscribing for more in-depth corporate breakdowns. We also have a thriving Discord community, linked in the description, where you can discuss these topics further. Thanks for watching, and we'll see you in the next video.